Good evening. Thank you very much for joining us on the bottom line. So Ghana's economy has in recent times seen some very steep valleys and is currently on the rise to the top of the mountain. This is from reports from local reporters, local media houses, and even on the international media scenes. We see that on Bloomberg, we see that on Metro TV news pages, we see that on the front pages of the newspapers. And it's been a story to tell how the economy tumbled to so low, especially the strength of our local currency as against the major foreign currencies. I remember you looked at the prices of petroleum, especially petrol and diesel, how they went very high up and how they are coming back low, which has received some commendation from a section of the public. However, is the economy sustainable or not? These and many other things are what we are looking at tonight. Organized labor has threatened to embark on an indefinite strike from the 27th day of this month if government doesn't reform its debt exchange program. Today we heard the finance minister announcing another form of the restructuring of the economy as regards the debts on the foreign markets. We have a lot to discuss tonight. You want to stick and stay with us. We are coming your way live from our studios here at Rage in Accra. My name is Kwesi Free, and this is the bottom line. We say business at the speed of thought. Stick and stay with us. We'll be right back. Right, so you're welcome back from the break. This is still the bottom line. And tonight, I've introduced to you the topic that we are going to have a look at. We are looking at the economy in general. And we have some statement for you on the screen. And of course, I would walk to the screen and be able to tell you what is happening or coming from the finance ministry to us today. Let me give you a bit of a history. And briefly, you remember how the economy had been with everybody calling on the finance minister to be sacked by His Excellency the President. We had members of the majority side of Parliament calling on His Excellency the President to either sack the President or they do not participate in the business of the House in Parliament. They actually came to a truce with the President and now had to sit in the budget reading. This came, and then, of course, after the budget reading, the issues about the IMF also came up. But let me remind you that IMF issues had seen some bit of turbulence because the finance minister himself had told the whole country that we will never go to IMF because of the e-levy. E-levy practically failed, and then we resorted to the IMF. Lots of activities, lots of requests, lots of anticipations, and lots of projections had come up by economic experts, lawyers, and people who matter in the economy, projecting what the IMF would require and some restrictions which were going to be put on the economy should we go to the IMF. Eventually, we went to the IMF, and I think about 2 weeks ago, we saw a statement from the finance ministry followed up by a video by the finance minister himself announcing a debt exchange program for the local economy. Some people were asking what was going to happen on the foreign markets as well. Today, we have this here. And I'm going to read it to you. When I am done, I'll come back to my guests who are already seated in the studio, and we'll get into the economy of the country as it is now. So this is heading Suspension of Payments on Selected External Debts of the Government of Ghana. So it says, this year, 2022, the global economic shock induced by the Russian invasion of Ukraine has further adversely affected our economy just when it was beginning to recover from the pandemic. The combination of adverse external shocks has exposed Ghana to a surge in inflation, a large exchange rate depreciation, and stress on the financing of the budget. These factors taken together have put the sustainability of our debt at risk. So you remember that government's communication, and of course those from the Ministry of Finance, and everybody that spoke for government had insisted that our current problem as a country economically are based on exogenous factors. primarily COVID-19, primarily Ukraine-Russia war, and these are the reasons they have given in this statement. Of course, it was the same reason they gave for the domestic debt exchange program, and this is the preliminary to the statement they have given us here. So we'll go to point number 2. Well, let me just pick it up from here. It says, we therefore formally requested IMF assistance based on the reasons which have been given. The country requested for IMF's assistance in July 2022. A staff-level agreement, SLA, has subsequently been achieved and announced on 13th December on a financing program aimed at restoring macroeconomic stability and debt sustainability and preserving financial stability while protecting the most vulnerable. And as it says, government says this program, the announcement plus some very prudent measures it has put in place is stabilizing the economy. We'll come to that when we sit with our consultants here in the studio. This SLA milestone was achieved in record time. It is with this same spirit that we therefore expect creditors to also respond in an expedited manner to ensure that the IMF-supported program is adopted by the IMF board as soon as possible in early 2023. Let me jump on to the next slide. As it stands, our financial resources, including the Bank of Ghana's international reserves, are limited and need to be preserved at this critical juncture. That is why we are announcing today a suspension, and we want to take note of this part. That is why we are announcing today a suspension of all debt service payments under certain categories of our external debt, pending an orderly restructuring of the affected obligations. There are some exemptions. I'm sure our next slide will be giving us that. So let's move to this suspension will include the payments on our Eurobonds, our commercial term loans, and on most of our bilateral debt. This suspension will not include the payments of our multilateral debt, new debts into brackets, whether multilateral or otherwise, contracted after the 19th day of December 2022, or debts related to certain short-term trade facilities. I don't know if you have some more slides, but I think this is the most important part. This is where we ended. So I will leave it here. Well, it goes on to say this suspension is an interim emergency measure pending. This is also a very key and important point for investors of the economy and those who are interested in whether you're going to lose or whether you're going to gain. And with all the releases that have come from some local players in the economy, this is very important for you. It says this suspension is an interim emergency measure pending future agreements with all relevant creditors. I'll end it here because I have my resource people seated already in the studio, and then walk back to my set. I'm sure I'll take a quick break, or there is a bite I'm going to play for you. Whilst we play that bite, I'll get my guests seated. Once we come back from the bite, we get on with the discussions right away. Is the economy sustainable? Is the rebound we are seeing sustainable? Or how? Where exactly are we going as a country? Stay with us.
The stakeholder engagement, government has agreed to extend the expiration date for the domestic debt exchange to 30th December 2022 to allow for key concerns raised by stakeholders to be accommodated in some form. The launch of the debt exchange program, coupled with the signing of the staff-level agreement with the IMF, have aided our stability efforts and have in particular contributed significantly to the rebound of our currency. While accommodating the inputs of stakeholders, we must do all we can to sustain the gains of these initiatives, keeping in sight the urgency of obtaining IMF board approval in Q1 2023. The cost of this not succeeding will be too huge for our economy. Necessary precondition for this is a stable macroeconomic environment. Viewed within that lens, restructuring our debt is only but a necessary part of our story. The ensuing years will focus on building an entrepreneurial and export-driven economy as we grow the economy to protect and create jobs, tackle inflation, and strengthen our currency. Importation of food should soon be a thing of the past. We cannot afford to lose this essence of forward momentum for our economy as we navigate towards stability, predictability, and growth. 2023 must be our comeback year, a year in which we put in place stronger foundations that will allow us to change our country for the better and in a way that is enduring, inclusive, and transformational. We all have a role to play, and I urge us all to work together with the government and support the various interventions being implemented to kickstart our recovery in a determined, bold, and courageous way. Above all, I urge us all to maintain an unshakable sense of optimism about Ghana in the days and years ahead. Indeed, the Lord is the lifter of our heads. Psalm 3, verse 4.
Right, so that is the Finance Minister, Ken Ufori Atta, speaking to you and myself on some of the things that I've presented to you early on. Let me come back to the studio. I mean, the rest of the time is not for me, it is for my guests. I have to my right our very own lawyer, Kwame Jantua, Chief Executive Officer of Africa Energy Consortium Limited. Council, good evening. Thank you very much for joining us. I am doing very well. I hope you're doing well as well. It's been a very, yeah. And I have Dr. Tia Abdul Kabiru Mahama, Technical Advisor, Office of the Vice President. Doc, good evening. Thank you very much for joining us. I hope you're doing well as well. Let me go straight to the point, and let me begin with you. What we have seen today, I want to begin with Ghana suspending payments on the selected external debts. What does it mean? What's for the purposes of the layperson watching us? What does this mean? I mean, the domestic debt exchange had come. People were asking of what would happen on the foreign markets. What does this mean?
The announcement by the finance minister is a prelude to the whole external debt operation. And that we had mentioned, our government had mentioned that to bring our debt back to a more sustainable path, government needed to also look alongside the domestic debt exchange program, an external debt operation program. That program will seek to bring our debt back to sustainable levels. And as a result, this announcement is a communication to the investors, to the commercial market, to the Eurobond, to be precise, that as part of our IMF program, we are announcing a debt standstill for that category of investors, say Eurobond loans, commercial short-term loans, and then bilateral agreements or bilateral loans that have been contracted. In other words, payment of obligation due government regarding or in respect of those stated instruments would be withheld or would be on standstill until we have concluded the discussion or negotiation on that external debt operation. So briefly, what the finance minister essentially announced was to the effect that government obligation due this category of investors would be in abeyance, would be held whilst we engage on the final roadmap. This is actually a part of the routine debt operation program. Government, in order to, in fact, people had announced that government should have, market observers or watchers had noted that government needed to announce a debt standstill program earlier on. But, you cannot announce this measure without thorough engagement with some market. And that is why the finance minister was quite selective. My view, understanding is that they had done some engagement in respect of those category of investors. And that is why he's a bit comfortable to mention that we are having a debt standstill or we are having a suspension coupon payment in respect of those category, say commercial loans, commercial term loans
Eurobonds,
and
commercial loans, and most bilateral
agreement.
debt.
So basically, that is what the announcement seeks to.
I was going to ask you about the impact. I mean, should they get up in arms like we are seeing the organized labor in our country here getting up in arms? Has there been an extensive consultation? But I mean, you coming from the vice president's office, we should take it as that.
Yeah, I mean, from where the vice president would have will always have regular update of this particular process from the finance ministry, and the finance ministry being the lead in this process would have. Our understanding is that they have engaged this category. I mean, commercial term loan, commercial term loans, and that of Eurobonds and the most bilateral agreement. That it is on the basis of that particular engagement that we are having this announcement. That said, I mean, if there is any dissenting investor who feel that a lot of engagement hasn't been done so far, government is more willing to engage them to bring finality to this issue. But then, from where we sit, where we stand, where we observe from, it is our view that extensive engagement consultations have been done, and this consultation is what have crystallized to this announcement. Of course, I remember on the same, not on the same platform, but on other platform, I had mentioned that the external debt restructuring had to go, it has to go hand in hand with the domestic debt restructuring program, and that some had even suggested that government needed to even announce the debt standstill in the external, but government want to take everything logically and systematically so that we don't have a disruption in the market of investment, in the capital market. But that said, this announcement is a major relief. It's going to be a major relief to government, especially so when.
But a burden to the investors. And I was going to ask whether you think it gives a date today that all investors after today will not be affected. I mean, you are curtailing people's investments and their profits who have invested already. It sends a wrong signal to the market out there on the foreign market.
Yeah, I think that the market had. I believe
the country is we are defaulting. We can't pay our loans. We can't pay our debts.
I mean, the finance minister, the country, the investors, all of us have understood that we are not in normal times. This discussion has to be posited within that context. That government is not getting up one day to say that I am defaulting in the binding contract I have signed with my investors. Of course, the bond is a contract, and that's not the position of government. But government takes cognizance of the fact that in this contracting arrangement, we have what we call the collective action clauses. We have what we call the sovereign risk element, that when you are faced with an issue of this, nature, a global crisis of this nature, an economic downturn of this caliber, you will need to do something as part of the things that you need to bring back your economy. In fact, it is in the interest of the investors to have this economy moving. And if they have to forfeit some investment in order to get the economy back so that they can invest, they'll be more than willing to do that. Of course, no one is willing and no one is happy parting his investment or her investment. But that said, that is one of the necessary decisions that the government is rallying the investors to agree with the government in this regard. So, of course, we would be playing ostriches if we say that this is not going to affect the investors, their portfolios, or their asset holding. We are not going to deny that that's going to affect their investment, but government is also cognizant of the fact that we have a country that we need to sustain, and to sustain that country so that even investment could even be promoted. It is in the context of this that I think that the investors will come to the table and they will have understood the decision taken by the finance minister on behalf of the government of Ghana.
Lawyer, let me come to you now. For purposes of sustenance, as Doc says, this is the way to go as a country. I mean, for whether we are lay people or whether we are economists or whatever it is. This is the stage we are as a country, and we have little to do apart from the domestic debt exchange program and the suspension of payments on selected external debts. Good evening.
Good evening.
To the general public and how it is received out there. Look, the international community knew that the moment we decided to go to IMF, we were caught in a trap. They know it. And they are comfortable in terms of us going to the IMF because they can trust the IMF to get the economy back in place. And if you remember, the IMF themselves, when they had this joint conference with the Minister of Finance, they said it depends on us. What we bring to them is what will decide whether we get an executive level agreement or not. 3 areas: domestic restructuring, foreign restructuring, and bilateral restructuring. The last 2, the foreign and the bilateral, that's international. It is in the line of business where this is concerned. And I don't think where the foreign restructuring and the bilateral restructuring is concerned, we would go through what we're going through with the domestic restructuring. Look, where the domestic restructuring is concerned, so far as I am concerned, it's a question of communication, period. Because if you listen to the unions, they are saying we weren't consulted from the word go. We weren't part of the discussions from the word go. All we heard was on TV that this was coming on. And definitely, it is their pensions. It is their money. That is going under restructuring. And they feel we've got to be part of it. We have to be able to discuss this thing around the table. And for me, I think it is good that they are part of it. It is good that all stakeholders are part of it. Because look, country broke, country no broke. Aren't we all inside? Well, are we all not going through the challenges? Are we all not seeing the impact of where the country is today? And so what is so difficult in bringing the domestic side together and forging out some way forward? I believe that before we even decided to go to the IMF, or when we decided to go to the IMF, the discussion should have started with stakeholders. I believe if the stakeholders sat around the table and we all went through to the fine-tooth comb, brought their suggestions, government brought the suggestions, we looked at it, we jumped it, we did X, we did Y, and came up with a consensus document for the IMF, I don't think we'll be where we are today. But having said that, it's never too late. It's never too late. And why do I say it's never too late? We can still talk with regards to the domestic restructuring and the challenges we are going through. And I think at this point, it's past the head of the Minister of Finance. Right now, at this point, if for nothing at all, the economic management team should take over and sit and dialogue with the unions. Look at the number of unions who are saying they are going on strike. It will bring this country to a standstill. And we can't sit and fold our arms and say, if we don't get this, we are not going to get the IMF loans we are looking for. We need to talk to the people. We need to. And if we don't, then where we are heading for, I don't think is fun. We should do something about it now. It's still not too late. The IMF will not put their voice in it. The foreigners will not put their voice in it. Bilateral will not put their voice in it. It's up to us, we the people of Ghana and government, to get this going. And it does not have to be partisan. It does not have to be partisan. Opposition shouldn't stand on the fence and throw water into the room. They should try their best. Yes, it's up to government to also invite them in. But we've got to a stage where that has to happen because it's critical, very, very critical. And the finance minister announcing this, for me, is the process. But the way it's announced makes it look as if, it makes it sound as if Ghana is not prepared to pay its debts. We have to get over that kind of communication because we are already in IMF and the IMF expects us to do these things.
Let me come to you now, Doc. Some people actually think that what lawyer is saying is actually the case. The means, method, mode of communication, how it's communicated to the members. There are even some of these organized labor who have called for the finance minister to be sacked. Do you think, as lawyer is saying, the EMT should take over? Obviously, we know that they have been involved in the process, probably with the engagement with the IMF and so on and so forth. But to take over, take charge, and be the front runners in making sure that this happens?
First and foremost, I've not had the sense that, and the finance minister hasn't communicated same to the effect that the tax of facilitating this process is daunting and beyond their carrying capacity. That sense has not been gotten, or we've not received. I haven't received any of that sense from the ministry. And so far, I mean, where I sit and I observe, I feel that they are doing a very good job. For a record time, we've had a staff-level agreement. And that is something that if they were not on top of the job, if they were not doing their job as expected, we wouldn't have chalked that milestone. So, of course, issues about engagement, issues about communication are germane issues to this particular negotiation. And I agree with Lawyer Gentua that, look, communication is everything, especially regarding issues of this nature, that you need to intensify, you need to, enhance communication on this issue to bring everybody on the table and to have consensus building around the issues on the table. But that said, my position has always, how much communication is much enough or more enough in this regard?
Should we have gotten to the point where, in fact, I call them special needs services. You have registered nurses, you have midwives, you have teachers, you have the Ghana Medical Association, for example, giving an ultimatum. 27th day of this month, we are going on strike. Should we get to that point in this economic crisis?
You see, the truth is that, of course, like Lawyer Gentua mentioned, these times should have been a period that we will have sober reflection upon the issue and not to be engaged in this, for instance, unproductive and kind of rivalry among trade unions or between government and also demonstrational agitations. Because this is not the time we need that. This is the time that we need to sit down and look and see, even though government had not consulted you, is it still late for government to engage you on this issue? I mean, that's what the finance minister had to extend the date on the domestic debt restructuring program to the effect that government is still open to engaging. The expectation, which is rightly so, was to the effect that, you see, the fund managers, once engaged, would have the onerous task of engaging the individual investors. Because for the purposes of that role of being trustees, that is why the government brought you to the table or brought the fund manager to the table, who have the responsibility of also communicating back to the investors or to the pensioners or to the person contributors. But if that was not done, if that was not so effective, if that was not so, engaging or much more collaborative in nature, then government could step in. The government is willing, from the demeanor and the posture of the finance minister and from the answers to the questions when he even announced the joint press conference that they had with the IMF. The posture of the finance minister shows that they are more than willing to engage, the unions, to engage this prospective pensioners on this particular fund. The fact that the haircut or the fund that the domestic debt exchange program is going to affect their investment or their funds investment. So government is willing, and government is willing that, the extension of the date is a demonstration of good faith, that government is not trying to bulldozer its way in regarding the implementation of this exchange program, but government wants it to be consensus-based exchange program. So that is the posture of government. I think that it's not too late yet for them to renege on their previous promise of not agreeing to the program. I don't want to believe that, and I don't want to feel that that's the sense of the union, that they are not totally in agreement with the fact that potentially the program would affect their investment. I'm not sure that should be the posture. The posture should be that let us have full understanding. Let us have full consensus. Let us have comprehensive insight into the program and how much more we are going to lose or how much less we are going to lose as a result of this operation, as a result of this domestic debt exchange program. If that is the understanding, I think that we must have utmost sunshine. You must have transparency. The process must be known well ahead to them so that we can all be on the same table on this. But that said, engagement, collaboration, communication, all are good and well, and government should be, and we are willing to engage them to have consensus on these issues.
So let me come now to the...
Can I add something?
Yes, please. You can go.
When you look at the statement that the
Organized labor.
organized labor put out. And I would read a bit of it, and I quote. It says, already, pension is low, and we would have thought that our government will do everything to protect the small pension we have. Instead, they are introducing program inspired by the International Monetary Fund to cut further pension income. Therefore, the Trades Union Congress and all its affiliates have decided that the pension funds of our members will not be part of the domestic debt exchange program. He added, you go to see, pensions are low in this country to start off with. Have we done anything about low pensions over the years? How much does somebody who has retired, how much do they get after they retired? Peanuts. And somebody has decided, okay, it doesn't matter. Let me put my pension there, at least, if for nothing at all, I can drink some water. And you're telling him that first year, no interest. Second year, 5%. Third year, 10% ongoing. How can he survive? How can he or she survive? That is why it is so crucial and important to have this discussion on the pensions. And maybe, and this is what sometimes I don't understand, and sometimes the president leaves it to the last minute when he's pushed to the wall. He should step in now. If he's not going to be the economic management team, he should step in now. Call Labour. Now that Labour has threatened to go on strike, call them now. Because you see, it's dependent on the IMF giving us this loan. He shouldn't stand aside and leave it for others to do. Take charge, take command, show that leadership. That people will see and the pensioners will see you are thinking of their small pensions. Because at this point, Labour feels they are all on their own. They have said it, haven't they? They said the debt thing they are doing is voluntary. However, if you don't accept, then you're on your own. So if I'm on my own with my small pension, then I won't go into it at all. Stop it. Because you're not prepared to cushion me. You're not prepared to support me. So how do you expect me to go along with you? I think the president should step in. If the economic management team is not going to take over, yes, the finance minister might advise the economic management team, but we want to see leadership. We want to see new leadership taking over because the finance minister already, they have said he should go. A lot of Ghanaians said he should go. He's still there. Fair enough, because the president wants to keep him. People don't have that confidence in the finance minister to be able to handle this challenge. So if that is the case, push it to another dimension. Economic management team and even the president be part of it so that we see that the concern is there. At this point, Labour and Ghanaians don't see that concern. Hence, we've told you, if for nothing at all, cut down some of your expenditure. And one of the expenditures we are saying cut down are number of ministers. Who has done it? You tell us, yes. We've told them 30% of their salary goes, you need to cut down on vehicle usage and all. Is that substantial? Is that substantial?
And that leads me to the point that I was coming to. I mean, not to cut you, but it leads me to the point that I was coming to, that the finance minister believes that this, plus the announcement of the domestic debt exchange program, plus some prudential measures government is putting in place, is helping the economy rebound. We are seeing petroleum pricing, diesel prices at least come down from 23 to about 15 or 16 now. We are seeing the cedi appreciate against the dollar, for instance, in very high percentages. Bloomberg is reporting and all of that.
What are the prudential measures? What are those policies? You see, at this point, when the president comes and tells us it's because of strong policies from government, he should tell us. He should just mention it. He should tell us what those prudential, those policies are. Because I bet your bottom cedi, this cedi, the way the cedi has come down and the way it can go up, come down, is premature. Why do I say it's premature? Early next year, we don't have support that we normally had to support the cedi. And it is the first quarter of next year that international companies repatriate their earnings in dollars. Will that not spike the cedi?
Would have gold for oil setting in.
Gold for oil setting in. And you think gold for oil is something that can really hold the economy? Gold for oil is only oil. It hasn't got to do with the others. Look, gold for oil. I feel that if government is going to do gold for oil, they should use it as collateral with the banks, where the banks give the instrument for the oil to be bought, and the gold is a guarantee. So that if they are not able to pay, the bank then calls in the gold. But this gold for oil, your precious mineral, you're going to exchange it for refined petroleum products. That precious mineral can always go up. Who loses? How much does Tor require? 500 million to get it back on stream. How much do we spend every month in refined petroleum products? Around 380 million. Are you saying, even if we were to use our gold as collateral to get 500 million to put Tor back, is that not in the long term? And if we are able to put Tor back, is there not an added effect there? What is the added effect? We can supply our own people with our own crude to refine. And additionally, it also creates foreign exchange, because you get the landlocked countries coming in to also pick refined petroleum products from us. So really, I don't see this gold to oil thing, I don't see it as prudent. They might think it is, but I don't see it as prudent, because we have a refinery. If it so happened that we didn't have a refinery, fair enough. Look, I talked to some financiers, some international financiers, and they don't understand why, if we have a refinery and we are an oil-producing country, why we can't get our refinery back, and why we can't refine some of our own to keep monies in here. Your precious mineral, you're using it to go and buy refined petroleum products. What if the time comes and we don't get the quantum of gold that we are looking for? They are looking for at least 5,000 ounces every month. Those 5,000 ounces would have to come from small scale and big scale. The big scale people would then have quite a lot of cedis, wouldn't they? Because the gold is going to be paid in cedis. They'll have quite a lot of cedis. They would have to change those cedis into dollars. And if their cedis are going to change dollars, is it not the same problem we are getting ourselves back into? So I think we should look at it again and see how we can craft it in a much better way. But I think Tor is strategic in this refined petroleum products issue.
Tor is strategic in this refined petroleum products issue, so the gold for oil, and then the issue of the economic rebound. Government has suggested that it's based on prudent measures that's been put in place. Some of the items have been listed, but let me allow you to.
Yeah, I think, first and foremost, I would want to say that the president, when he said it, mentioned, I think my senior brother noted that what did the president say as the reasons. But if you had listened to the president or if you had read his statement, you would have realized that the president mentioned specifically that he mentioned about 3 policies, which were those he highlighted as some of government's contribution, government's role towards the rebound or the relative stability we have experienced or we are experiencing with the Ghanaian cedi. The president mentioned about the tightening liquidity program of the central bank, where people had questioned this measure, that you are hiking interest rate, you are increasing the prime rate of the central bank, squeezing out extra liquidity, thinking that there's money, and people have, bastardized this particular measure to the effect that they feel that there's no excess liquidity elsewhere to be mopped out. But the essence of monetary tightening is not just for excess, but to also preserve the relative value of your currency to attract investment into your local currency, so the holders of your currency will have good or optimal returns from the holding of instruments that are denominated in the local currency. So that was one of the measures the president mentioned, which is rightly so. The second measure the president mentioned about the staff-level agreement that has been agreed on. You see, the whole IMF program was to give us the financing assurance. And then when you are having a financing assurance, especially you are having a fully funded IMF program, you would expect that the confidence that it will repose, the confidence that investors would have in your economy would be enhanced. Okay, so that was another program that after we had gone through a painful exercise of having to reluctantly go to the IMF for the program, the agreement, the announcement by the IMF staff that they had arrived at a staff-level agreement with the government of Ghana on a prospective program or a potential farm program brings confidence to the investor community, and the president highlighted it. The president also mentioned, like you also mentioned, the Go for Oil program. And let me just quickly dispel the notion that, look, there will be demand for dollar by the fact that, large-scale miners are paid in Ghana cedi, which they need to exchange. Look, by this particular program, it is estimated that about 20% of gold produced by the domestic large-scale miners would be incorporated into this program. So a 20% of 100% leaves about 80% window for these large-scale miners to export. They will still get their hard currency from the exportation. Now, if you look at the operational profile of these large-scale miners, they have domestic workers they have to pay in Ghana cedi. They have operational, stationary, they have running costs they have to pay in Ghana cedi. They will need Ghana cedi for their day-to-day running. And a 20% of the value of produce is even below the operational cost of this miner in the domestic economy. So it is not the case that there will be the need. In fact, the 20% was actually arrived at in consultation with the operators in the sector. So it is not the case that they will need to go and change the 20% which of the gold which was bought or which we are buying in Ghana cedi. They will need to convert that to dollar. So let me quickly dispose of that. That is not going to be an issue under this particular program. So the Go for Oil program is quite a simple operation. And I think that when we begin to roll out the program next year, I think that people will have understood it better. But look, the chambers of oil distributors are well represented in this program. And that if they need any information, the frequently asked question, you can quickly walk to the Ministry of Energy, you can go to BOSS, you can go to PMMC, the stakeholders in this regard, and ask any question you need. The transparency and it's open for any oil importer, international oil trading company. It's open to domestic, to our BDCs and our OMCs to participate. So there's transparency and openness in this regard. So that is another program. We had also mentioned that, look, as modest as it may, the Bank of Ghana came at the black market operation that some forest bureau had to be closed down. That gesture sent a signal to the fact that government is not countenancing, government is not condoning to this measure of people profiteering on or arbitraging on the local currency. That's another measure government took in order to address this particular program of this particular issue of forex depreciation. But look, in all this thing, government had also, we've been mentioning that the major point about this, our dollar depreciation, he mentioned that the gain is artificial. In fact, if the gain is artificial, just like the depreciation was artificial, because action and reaction are equal and opposite.
But is it sustainable? Where we are now, is it sustainable?
I'm coming to the sustainability aspect. When you look at the measures put in place, with the Go for Oil the effect is only now signaling speculative, potential impact. But we'll begin to feel the real impact in January, February, March, when government begin to rule it out. So if something signals something, if something gives you a positive omen, or the omen is good because of the program, now when you begin to implement it, straight away, you will know that it is a measure that's going to keep the currency afloat. That's one. Two, government signaling that we have arrived at a staff-level agreement sends positive signal. Now, what if next year, January, we have board-level agreement? It's going to strengthen the cedi more. If we have $1 billion come in, say, in February or March, it's going to strengthen the dollar more. So those measures by themselves are self-sustaining. Of course, we can all look at the general issues about being a much more productive economy where our real sector, where our production of goods and services, we export more than we import. We can all look at that. And I agree with any discussion about that, about enhancing domestic productive capacity, right? But these measures by themselves are supposed to sustain the currency. And let not one deceive you. The movement of the currency was artificial, okay? It was not based on any underlying significant or drastic difference in our economic structure. Admittedly, we have had some challenges with our economy, but that changes in the economy did not warrant, did not necessitate the movement, the shift, the seismic shift we experienced regarding the Ghanaian cedi. So just like the movement was artificial, this measure government is just trying to reverse that artificial demand that we're having for the Ghanaian cedi. And when we have more artificial demand for the dollar, once we have more financial assurance coming in, once we have our goal for oil being kicked in, once we have the Bank of Ghana stabilizing the policy rate, and then the Ghana people are having confidence in the Ghanaian cedi, we'll have stability for the greater part of next year, where things will have returned to normal.
Because see, you know the crux. Mm-hmm. You know the crux. Mm-hmm. So we get IMF approval, board approval. Mm-hmm. Dollars start flowing in. What happens? We sit back. Because we go back to normal. At this point, what we should do, 3 things. We should look at the dollarization of the economy. We should look at imports. And we should look at inflation. These 3 things. We should aim to make the cedi the lead currency and bring down that dollarization. Look, if this government in 2016, they looked at these 3 things to start off with, to say this dollarization of our economy has to stop and work towards that, we won't be in this position we find ourselves in. When they came in, if they said imports, our country is an import-led country, we need to stop that. How can we in Ghana be importing 4 million tons of tomatoes? How? How can we be doing that? So if we don't look at some of these crucial things that direct the economy, especially the dollarization of the economy. Look, today, PURC gave us
I was going to come to that.
Yeah.
Increment in electricity tariffs from next month. Unfortunately, because of time.
Yes,
forgive me that I didn't mention it, but it was going to come.
Give us a brief in terms of how they arrive at the tariffs. One major challenge that causes this tariff instability or always increase is the dollar. The fact that we have IPPs that work with the dollar. The cedi isn't the main currency there. So we always have increases. Why wouldn't we want to look at that? Why isn't that important to government? To look at that dollarization of the economy. When you go to other countries like South Africa, are they dollarized? You go to South Africa today and you want to pay with dollar. They'll tell you, go and change into rand. Does that happen here? When the Bank of Ghana tells hotels, don't take money in dollars, and they take money in dollars, how do we implement the sanctions? If we do not stop the dollarization, we are chasing our tails. Because IMF money will come. 3 billion. What is the finance minister saying today? He's saying that this thing that he's brought in, the bilateral thing he mentioned today, he said it won't affect loans going forward. Are they still thinking of getting loans? Isn't this the point where government should tell...
loans after today.
Yes, it won't be. This is the point where they should tell Ghanaians that, look, because of where we are, there are certain major projects that we started that we can't complete because of where we are. We are putting a stop to it, or we are suspending it, so that people will see that they are trying to do something. But if you are still going to get loans, are we not chasing our tails? And this is what I don't understand.
Look, we have just 2 minutes to wrap up. You came, or the MPP government came. I'm sorry to have brought MPP in. Business platform, bottom line, we don't discuss politics.
That is part and parcel of the game.
Of course. But in 2017, the promise was we are cutting down taxes and increasing productivity. Boost productivity, cut down taxes. We are not seeing that yet. And I'm sure that's a point you're making currently.
Yeah, I think that...
In 2 minutes.
In 2 minutes, when government promised that governments try to move away from taxation to production, government started off with that particular spirit in the 2017 budget by removing or reducing about 20 or 18 different taxes. Okay, that brought relief. And those taxes, most of which haven't found their way into the budget again, except the VAT that has to be reviewed back on the back of this current crisis and the need for us to have revenue. So government did honor that particular promise to some extent. Government did not also just go on with that particular sloganeering, promise or statement. Government also kickstart the 1D, 1F program. That is solely focusing on production. A lot of factories have been set up. We are not yet there, as I always mention, but they have brought models. Econfi fruit juice has started exportation of fruit juice outside of the country. That is a modest contribution. That is something worthy of mentioning. Government hasn't also stopped there. Government has actually provided the ease of doing business. That is also in line with the production. For instance, government, the ease of doing business and the Ghana ranking in the transparency and doing ease of doing business actually gone high under President Akufo-Addo regime. That is also another signal that government did not yet jettison that particular promise of moving from taxation to production. Government had done something of that. Government had actually, when we talk of production, the efficiency of production, the Vice President led initiative of digitization of almost every productive sector, has cut down time or processing time or the turnaround time for businesses.
Right.
That is something of worthy of note. So government is doing, of course, I'll be the first person to admit that where we've not yet reached your destination, you don't say that it's over. But government will continually pursue programs and policies that will put this country on the path of production rather than taxation or import dependency.
Let me see if I can read one or two messages. In fact, producer is on my neck, and I wonder if the government understand the meaning of the word engagement. They are sitting down for unions to come and beg them. That's a question being asked. Kweku in La Paz sent in that one. Nana Ekuamwa Buatin Ablekuma Central, aka Dr. Baumia is coming, says, good evening, Kwesi. I don't really get our trade unions. The government met with industry players and they have agreed to sign on the debt exchange program. So I don't see the hue and cry of our organized labor. Good submissions from Dr. Tia Mahama. Nana Ekuamwa Buatin sent in that one. There is some hitch in the sound. Well, okay, technicians, kindly work on that for us. I find it difficult to understand the good